Hello and welcome to a Wealth of Advice market update recorded on the 11th of March 2025. Obviously, the main topic to discuss is what's been going on across in America with Donald Trump causing all sorts of volatility in the world markets as a result of his constant threats of tariffs that he's going to impose on various countries around the world, as well as the geopolitical stuff that's been going on. Everyone would have seen the recent spat with Zelensky in the White House. And what's happened thereafter, to and fro across Europe as to what Europe might have to do with its own defence spending, etc. And all of this ultimately is causing uncertainty. And as we've mentioned on this update many times in the past, markets don't like uncertainty. And one of the problems back across in America is Donald Trump has employed Elon Musk to head up the Department of DOGE, which is the Department of Government Efficiency. I listened to Elon Musk get interviewed about this last week, and some of the things he's saying aren't unrealistic. There is billions and billions of dollars of government money being wasted on projects that they know nothing about. There's a huge problem of fraud, he believes, within the system. And if he can reduce government spending massively, then he believes the US economy will be much more efficient in the future. The short-term problem and the short-term pain of that is if US government spending reduces massively, you can cause a recession, because a recession is calculated based on the total GDP, and US defense spending, government spending, spending on benefits, that all counts towards this. Across in the UK, you'll know that our budget is going to be the spring statement, as they call it, at the end of March. And that's one of the things Keir Starmer and our Chancellor are going to be looking at there. How can the UK cut £70 billion of spending on benefits, etc.? So these things in the long term can pan out to be good things, and there's a lot of sensible things being said. However, it's the way that Trump appears to be going about it with Elon Musk. It just seems like a bit chaotic. And if you do massively reduce government spending quite quickly and cause a recession, well, what will come next will have to be tax cuts and interest rate cuts to try and boost growth. And I think that's what Trump's end game is all about, to try and get taxes reduced and trying to get interest rates reduced. If you look at the chart we're putting on the screen for you right now, where you can see we're comparing the US stock market performance in Trump's first term compared to his second term. The first term is the green line. Purple line is what's happening right now, and you can see it's pretty much identical. It comes in, markets jumped on the back of that, obviously uncertainty over as to who's going to be the president, and then he starts talking about tariffs, trying to work out deals. Markets don't like the uncertainty, but eventually when things are settled, you see markets went up, and by the end of Trump's first term, the markets all performed very well. So let's hope that history kind of repeats on that one, and we see markets increase from here. Some other charts there from the US which I thought were interesting. The US Economic Policy Uncertainty Index, where you question people about how uncertain they are about what's going on in the economic world and what the future may look like. That's peaking again now. Americans don't like the price of petrol going up, the price of food going up, and the value of their 401k pension plans going down in value. And all of those things are happening right now. So you can see that they're really concerned. And the next chart you can see there, when it asks, do they think Trump needs to do more to tackle inflation? Well, yes, they do. I mean, that was one of the big criticisms of the Biden campaign, that he just allowed inflation to run away. And most normal Americans couldn't afford to pay for their fuel, their food, and obviously they saw the value of their investments go up. But those other two factors, the fuel and food costs were really going up, and they didn't like that at all. And Trump won by a landslide. So there's a lot of uncertainty in the air. And again, that's what causes markets not to perform very well. It should be noted, markets have performed very well over the last couple of years. We've had a really good run. So we are still in positive territory, but we're just going through risk and uncertainty right now. One of the big takeaways from Keir Starmer's visit to the US was that he agreed that the UK needs to spend more on defence. This is something that Trump has really pushed, that all NATO nations should spend more on defence. And as a result of that, money is going to have to be redirected from other areas. But if the UK does increase its spending on defence in the next couple of years, that should be good for our economy. It should make Europe feel safer if all of these countries are spending more on defence, with the geopolitical risk with what's going on in Russia. That there is negotiations going on now to try and end the Ukraine-Russia situation. Let's hope that all comes through. European markets have been very strong in the last few weeks, led by the German index. It's had one of its best weeks in recent times just recently. And this came on the back of the German Chancellor, Friedrich Merz, announced plans to amend the constitution. And the markets really were positive on the back of that. So hopefully we get more good news coming out of Europe and the UK in the coming days and weeks. And you will see that part of the portfolio going up in value. As we keep stressing, markets will be volatile at certain times, but if you have a well-diversified portfolio investing across a wide range of asset classes, you will get growth overall over the long term, and our clients have certainly seen that. It has been 5 years now since we started doing these market updates. We hope you still find them all useful and informative. If there is anything else you want us to include on these updates, please don't hesitate to give us any feedback. We hope we're delivering information which is useful for you. We hope to put your mind at ease when we're going through volatile times like we are right now.
Recently, we held our monthly investment committee meeting with Elston and discussed the recent market volatility and considered, if anything was required, change-wise. As we always do, we look to tweak the portfolios in order to drive positive returns for our clients. When we reflected on Trump's impact and the volatility, it's worth reflecting that the S&P 500 has a 10% pullback on average nearly every year. And as you can see from this chart, the data shows that the pink dots are where the S&P 500 has fallen to in that year as a low point, and then the blue bars show the total S&P 500 returns over the year. So it's worth remembering that 60% of the years we see the markets fall by over 10% at some point, and then as you can see, most of the years they've ended up with positive returns. As of Monday the 10th, the S&P 500 had fallen about 7% this year. So again, as we zoom out and think about long-term growth, we know that the US has driven a lot of positive returns over the last few years, and we don't feel a dramatic change is required at present. When we move on to look at market indices performance through 2025, we can see the impact of European equities driving ahead there, and we've got the FTSE 100 in blue, and we've got the S&P 500 at the bottom with the green index there. Again, this is a very short-term window, and we always encourage people to think long-term, but it's worth looking at some of that volatility that we've talked about and the impact of some of Trump's policies. When we move on to zoom out and look over a year, again, it's a bit more positive with that increase that we saw towards the end of last year. And then we've got that recent pullback with the market uncertainty, which is shown on the right-hand side of the chart. From a 5-year point of view, we have got COVID nearly dropping out from the left there, and we can see how markets have done well, particularly over the long term. These are the 100% equity markets, so again, diverse portfolios are more balanced than this, but it's interesting to see how the markets have done. And that FTSE, the blue bar there, lagging behind, and then the recent world indices driven down by the impact of the S&P and Trump's uncertainty that we've already talked through today. I hope you found this update interesting. Again, we know there's market volatility and there's some uncertainty. So if you have got any concerns or if you've got any questions for us, please get in touch and we'll be happy to chat things through.